All right, cool. So I think people are already able to see and hear us, guys. Thank you so much for joining tonight into our webinar that we're hosting you together with Andy, who's here, and he's a representative of Venture University. Just to give you a little bit of context, Ronald, my colleague, should have been here, but he has a few technical difficulties, which he's currently fixing. So he'll probably join us in the meantime. Just to give you a brief info about the agenda for today, we're gonna start with a few introductions about me, about Andy, of course, what we do, how we do it, give more info in regards to both Venture University and SeedBlink and what we are currently doing with the syndication, and of course afterwards we'll be addressing any and all the questions that you guys might have. I see that it's 2 minutes after 6, so we're gonna wait for probably another 2 minutes until 05, and then we're gonna kick it off. Thank you again for joining. I'm super happy to see everyone in the webinar, and can't wait to share more info towards you guys. Thank you. So two more minutes just to wait everyone to be able to connect. I see that more and more people are joining, so they still have a minute. Uh, Amazing. All right, cool. If anyone will be joining later, and if they are missing something from the introductions from us, they'll be able to ask any questions towards us. So all good. Cool. Just to start everything off, allow me to introduce myself. So I'm Bogdan Stoian. I'm currently the head of investment syndication with SeedBlink. I've been with the company for 5 years and something right now. I've went through the entire uh, operational process, sales process, creating the infrastructure that we have today process. And I think that where we are today, right now, as a company, has shaped me as an individual as well. So this being my first and the most serious thing that I've done up until now, I'm super happy and honored to be here and present in front of you guys. Without further ado, I will invite Andy to introduce himself. Of course, there will be a lot more to mention about him, as he's way more experienced than I am, and I'm excited to have you tonight together with me, Andy. So please go for it.
Bogdan, thanks so much, and thanks everybody for joining. My name's Andy. I've been in Europe for about 40 some years. I started my first company right out of college here in Germany, and 14 years to pay back my family, friends, and fools. And my second company was quite successful. I sold it to a French public company in 2003. I was on the board there for about 12 years and COO of Europe for about 5 years, and then had the chance to set up the entrepreneurship program at the Ludwig Maximilian University in Munich, where we were able to bring about 400 startups through the program over about 16 years. I also set up the German government's startups program, which is called the German Accelerator. Spent 10 years at Deloitte as a partner, building up the venture business there. And perhaps most important for the people watching today, I started two angel funds, both of which, before I joined Venture University. And today I am a general partner in our fund and responsible, together with my partner, who's my son as well, for bringing Venture University into the European market. So I'm really excited to be here, Bogdan.
Amazing. Thank you so much for the introduction. In order to kick the discussion off, I'd like to hear more insights about what is Venture University, how it works, how what information and what addition do you bring to those that take part within it, and any insight, anything that you found out throughout the years that helped, I think will help our audience tonight to understand more about it.
Yeah, absolutely. So I think let's just start very practically. I think there's a lot of people here are angel investors. As I said, I have two funds. We did a total of 55 investments up until 2022. And from 2022 until 2022, 3 and 4, I had zero exits out of those funds. And I joined Venture University in 2025. I spent 4 cohorts in the program, and in 2025, I had 6 exits. So what changed was obviously not my portfolio. What changed was me and the way I was dealing with the portfolio. And that's really what Venture University is about. It's about becoming smart capital. And I just want to explain very briefly, Bogdan, how we do it, because even for me, it was very difficult to understand before I actually joined the program. So VU Venture Partners, we are a full-scale global VC fund. We have about $70 million of assets that are committed. We do investment tickets between 200,000 to a million. And the name of the fund, VU Venture Partners, is important because the model is that venture partners who apply, and everyone here is welcome to do that, to join our program, become actual partners in the fund. So yes, there is a tuition. We'll talk about that a little bit later, but you are a full-blown partner in the fund, and you can stay for 1, 2, 3, or 4 quarters. And so what happens really inside, this is not like learning about it's not like reading a book about how to play tennis. This is about taking a racket and getting on the court and really hitting the ball. The only difference is this is not a racket you have in your hand, it's a checkbook. And it's our checkbook. So what that means is the following. It's an 11-week program. The first week is the only week of real academics. It's taught by our 2 general partners. You have 40 hours of everything you would need to know about what is venture capital. The more you know about investing, the more you learn in that week. The second week is about 60 startup pitches that you're watching live, online, in the room with the partners. And so you start to really understand what is a venture case, and you listen again and again. You also learn how to pitch the fund, which is very important because at the end of that week, you choose one of our 6 vertical categories and you join that vertical, at which point we give you an email address from the fund and we give you access to our CRM system. And we give you 100 deals that you personally are going to analyze. You're also joining a running fund, right? We've done already 120 investments. So there are people who are in it the second and third and fourth quarter. They help you also. And then the next 9 weeks, you're really in the fund. On Mondays, you're invited to every partner meeting. You watch as all 6 groups present their best 2 deals. You're welcome to join any one of the deals that you think is interesting. On Wednesdays, you meet with the general partner for a couple hours and discuss, how the deals are going, whether you should take it to the investment committee. And then you also join every single investment committee. So what that means is that all the different groups are bringing deals. We say that we'll do around 3 to 4 deals every quarter. I've been there now 6 quarters. We've never done less than 7 deals. So we're highly active. And when the deal passes the investment committee, The fund makes the investment. So you're really guiding our checkbook. Just like in any other VC fund, the general partners have to approve the deal. But last quarter, we had 10 investment committees and 7 deals were actually approved. So it's a very high percentage. And so what happens is when you leave the program after 3 months, you've done 2, 3, 4 deals. If you stay for a full year, you'll have done 20 deals. And what also is interesting is you learn how to set up your own fund if that's what you want to do. You also learn how to set up syndicates. So we have a lot of people who are really understand investing a little bit, but haven't really gone through the details of really doing deals from start to finish. And that's what you get out of Venture University. And then you are really like at a different level of confidence about the conviction you feel for the deal. So this is the only opportunity that I've seen other than joining a VC and getting a job at a VC or starting your own fund. And one of the main reasons that this program was started is because for the most part, people are learning the trade by spending their own money. And you just spend a lot of money. And that's why, over 60% of angel deals go to zero and a very small percentage of them actually return. This is an opportunity to learn, not just with your money. If you do want to invest, yes, of course, we always open an SPV and we do send that out and you can invest starting at $5,000. So that's a quick overview for you in 5 minutes of what Venture University is.
Amazing. Just to give you some sort of my the most important thing that I've seen from the SeedBlink experience applied towards what Andy just told you about.
Yeah, please
So
do give us a real overview of how the syndicate works from your side.
of course, will do. A really, really important thing is that Sibling has learned when since we started to do syndicates was the fact that we understood that usually people invest not only for the startup but for the trust on of the people that are bringing the deal onto the table, and that's super important. And being part of the cohort of one of the cohorts of VU, imagine that you are going to be able to see opportunities to invest either through the fund or participate in syndicates that maybe you wouldn't have access towards. So that's an amazing advantage that you would have as being part of one of the cohorts of VU. And again, amazing. I've seen investors through that joined in 2020 within SeedBlink's community without actually knowing or understanding a lot about the startup community across Europe. I'm gonna talk mostly about Europe and what's going on here right now. It's really important for other people to be able to connect with each other and understand that sharing the information between the parties is one of the most crucial things in an ecosystem that's still developing. And with the syndicates that SeedBlink is doing today, and I'm going to get into how it works, the infrastructure and everything else, but having people that connect with each other towards the same goal, towards the same target to, yeah, of course, do the investments, get the profits out of the investments and everything else, but also increase the ecosystem. That's one of the most important things. And that's what SeedBlink decided to do, decided to create a way in which investors can become together as a one and invest as one. Just a small introduction for my colleague Ronald, who is our panelist today. He joined us, so just wanted to give him a warm hello.
Thank
Cool.
Sincere apologies, guys, for starting without me. That's a rocky start.
All good. No worries. So yeah, Sibling decided that the infrastructure is the thing that is currently lacking when it comes to putting investors together. Because yeah, of course, there is a lot of money onto the markets. There is a lot of potential when it comes to startup. But how do you make it happen? You need the bridge between large number of investors that don't really have the capital to cover a ticket and the startup. And with the infrastructure that we have, with the vehicle that we are using, with the way we've created the technology behind everything that's related to syndication, we managed to to cover that gap between the parties. Looking at what and thinking a little bit at what Andy said with his entire experience and everything else, SeedBlink has been on the market for briefly 6 years, but we interacted with so many investors and so many startups in a way that taught us about the needs. That's what we are trying to do. We are taking the needs from the startup, from the investors, and putting something together to make it work. Just to give you some numbers, so through SeedBlink, we've done more than 200 rounds, public, private, secondaries, anything that has happened since we started. We had incredible volumes. We had exits up until now. We are seeing, I don't know, liquidity when it comes to early stage investments. So we are evolving on a day-by-day basis. And we would like even those that do not consider themselves as an angel right now, because they're not part of an angel network, they are not part, I don't know, of a large angel group that provides deals and everything. Maybe you can put together your small group out of, I don't know, 10 people that you've met with, either in the sibling community, either in, I don't know, certain business related communities, whatever it is. Put it together and start investing. You'll see the change when you are the deciding factor when it comes to a private investment, a private syndication. You will see how important that is, because at the end of the day, you look at your portfolio and you say, all right, so I invested in this one because of this reason, this one because of the other reason, and you have a diversified portfolio completely. And here, what I wanted to return towards Andy with a question in regards to all the knowledge that's been shared and all the access that's been shared towards the participants in the venture university cohorts. You mentioned all those pitches that are happening in front of the participants. Do they have what are they getting out of it? Because it's really important for everyone to understand that, all right, you see a pitch a month, it's one thing. You see 60 pitches in less than a week, you are learning something else. You'll see exactly what how hard it is to differentiate and how difficult it is, because you might want to invest in probably half of them, but you need to decide on the right one. So it's super important. What type of insights have you seen older participants take from that exercise?
Yeah. So, I think everyone here who's done investing right now or is thinking about doing investing realizes it's quite a large responsibility you're taking, right? You're making, it's your hard-earned money, and people are relying on your judgment. Okay. And so, especially if you were to set up a syndicate where now, which is possible with great platforms like SeedBlink, you want to be confident that you understand that the people who are investing then with you are essentially the VC in the syndicate. You are asking other people to come and give your money. And now you have to ask yourself the kind of question, do I understand portfolio construction? Have I ever really understood how to construct a proper portfolio? Do I understand how we're going to deal with follow-ons? Do I understand how to do market sizing? What is the way to achieve, what do I look for in a startup which is really going to be able to achieve mass market penetration, right? Because that's like one of the things that we make a very big deal about is, what is the magnitude of improvement that the startup is offering, right? And you as a syndicate manager, you don't want to be bringing your LPs a deal which is just sort of a little bit better, right? Because if it's a little bit better, it's not going to produce the kind of returns that venture needs to produce in order to be successful. And so one of the things you really start to see when you watch 20, 30 pitches, and then you start afterwards, you get 100 deals to look at and you start analyzing them, is you start to be able to recognize very quickly, is this a massive transformation Because if it's not a massive transformation, why don't we just invest in real estate, which we can get 2 for 1? If we don't believe that it's genuinely going to be a 10x, if we don't believe that it has the possibility of being 100x, yeah, how much of the, in a fund perspective, we, for example, would not make any investment if we didn't believe that that one investment was going to return 25% of our fund. Yeah. So those kinds of metrics, that's kind of understanding is something that you can read about. But when you're sitting on a deal team and you are going through due diligence and you are doing waterfall analysis, yeah, and you are understanding how to deal with the founders and what kind of problems must be solved when, yeah, and you start to have real deal experience, real attribution, you've done deals, you start to feel a level of confidence where when you go out as a syndicate owner, you say, look, I really do understand. I've done 3, 4, or 5 deals. I know how they work. I know what the difference is between a not so interesting angel deal and a really high potential VC return deal, which we think is going to create that kind of return for for all of you. Yeah. And so that's the kind of responsibility, VC and angel investors, we essentially decide what companies are going to get to the next level, right?
Cool, amazing, just amazing. Roland, if you'd like to take it from
Sure.
us, that'd be amazing.
The late host, and again apologies. And I believe we had the proper introduction of Andy, and I'm very pleased and honored to have him here. When we look at the venture capital landscape in general, I guess you already touched upon this point briefly, especially over the last decade, but what we see is that venture has grown massively. I mean, obviously the States is leading the way, but Europe is following with a 5 to 10 year kind of time lag. What would you guys see has changed most about what makes capital effective to doing capital, meaning, as Andy just pointed out, the angels as well as the VCs pick the startups who might get the funding and then might have a chance to go for it. What has changed in your view? What makes capital most effective today? Andy, maybe you can start on that one.
Yeah, sure. I'd be happy to, Ronald. So, one of the major things that changed is companies like SeedBlink have come to market, right? So the amount of people that are able now to invest in deals has increased dramatically. Yeah, the other thing is that therefore the amount of money that's out there has increased dramatically. What really is the challenge that we're facing right now is that this question of, well, is the money smart capital, right? And this is really, because imagine it this way: it's like, would you go and have if you needed your teeth operated on, would you go to a dentist who had never gone to medical school? Yeah, I mean, certainly you wouldn't. That would be highly irresponsible. And yet, what's happening more and more is that people are simply investing money because they think it's a good idea, but they don't really have the understanding of and real comparison of, well, how should this be done, right? And so it is very essential that we're talking about how do you do due diligence, but what is the right way to do it? What sort of questions do you need to answer? But also understanding how to interact with a founder, right? So I mean, just like a real life story, I called after I finished Venture University. I called around 20 of my portfolio companies and I simply said to them, look, unfortunately, this is not a VC case. We are not going to be a unicorn. We can have a great exit. You guys can put, multi-million dollars in your pockets, which will change your entire life, but we need to exit the company, right? And so let's really start an M&A process. Let's really start to understand, how do your multiples look? Why do you believe that number is achievable? Are you comparing yourself to the right kind of company? And so we were able to help, or I was able to help maneuver companies into very positive outcome M&A deals because I understood where they were as a company. And I think this kind of knowledge is what's essential for also making sure that, if we as investors are more successful and we have more exits, we are going to invest more. Right? What's happening now is we're not being successful, and especially in Europe, of my 55 companies that I invested in, there's not a single one, not one of them, that got past the A round with just investment from Europe. They all ended up going somewhere else. And now what we really need to do is we need to raise the level of knowledge and understanding about when to go in, when to get out, how to exit, how to harvest investments, right? So that people start being more successful, yeah, and they feel comfortable building syndicates, bringing the right kind of people in. So there's been a lot of changes.
Yeah, makes sense. I think that's something that you see across the board with European VCs, if I may add my 2 cents here, is that it looks all good and well. You're investing in a certain amount of companies, a lot of spray and pray approaches, but then thinking about the exit route might come a bit too late. And that's what you unfortunately see in a couple of VC portfolios, especially European ones, because capital markets are not as deep as in the US States. So you got to go for an M&A at a certain point in time, and being exit ready sounds good in theory, is hard in practice. Bogdan, anything you want to add here?
Yeah, so I just want to reinforce a bit what Andy was mentioning. So what we've seen from a syndication point of view, there were cases where someone presented a deal towards a large amount of people, and just due to the fact that those people didn't have the knowledge or didn't know how to perform a good due diligence to understand if that startup is a good fit for the portfolio, it made them invest what we call internally empty capital. So you just give an amount of money towards a startup, and you expect overnight or over a few years to have a return on it. But the capital that's inputted by angels, it's important to bring value to the startup as well. It's super important, because at the end of the day, early stage, when we see the most cases with the angel investors, they require help to uh, to, to actually grow the company. It's super hard to penetrate multiple markets to do everything, and you as an investor have a stake into that company. So it's super important for the capital that you as an angel are investing into someone to bring the value onto the table. So about the way the due diligence should be done: can I help this company not only with the money that I'm providing today, but also with something else that will make my return better when it comes to an exit? And second of all, what really is interesting from Andy's perspective, yeah, all the companies that we've also interacted and we've seen that they are getting to a maturity level. They are moving slowly but surely outside of Europe, due to the fact that the checks provided by multiple parties across the continent are not enough for that people to be able to scale to that point where an IPO is on site, or an exit is on site. So yeah, I completely understand and this perspective onto that. The only other mention that I like to do is, compared to 2020, at least with our companies, we've seen that it's easier to access Series A, Series B, even in Europe, more than Series B. At least from my experience up until now, I haven't seen solely receiving capital from Europe. So yeah, that's what I wanted to mention.
The classical growth stage funding gap that is hard to sort of pull off with European capital, and we see it across the board. It's a European phenomenon. That's why the Americans come in, or international investors for that matter. Looking at how to be wiser and more diligent with capital invested in startups. How do the structures like formal education, and we touched upon syndicates, accelerate the path towards becoming such kind of investor, and how do you get there? I mean, Andy, you have decades long experience. I assume you learned one or the other lesson the hard way. What was your growth path to becoming what you would consider a professional angel investor by now?
Yeah, my growth path was obviously I started the Entrepreneurship Center at the LMU, so I helped hundreds of startups coming through. But my first deal was also a syndicate, and I think what you see is that what a lot of people don't know is that one of the most successful VCs in the world, Andreessen Horowitz, we have a lot of fireside chats at Venture University. We had one of the partners from Andreessen Horowitz, the third guy on, and they started with, I think it was 25 syndicate deals before they raised their first fund. So, doing those kinds of investments, it's about it's access to a deal is not a problem. Access to a great deal is something very different. So now you have to ask yourself, okay, so how do I have the network to access these kinds of deals? If I do have the network to access those kinds of deals, do I have people who trust me to invest and to take care of that startup over the next, because when you make a startup investment, the reality is, you may think even though you're making an angel investment, it can absolutely be 10 years, right? So, and part of why it's important to learn how to do this is that the feedback loops in VC are so slow. So what happens is you make an investment, you even if you have a fund, you start probably raising your second fund 4 years down the road. You don't even have the returns from the first fund yet. And so being part of a fund, that's what we're trying to offer people, to say, look, shorten your feedback loops, talk to people who have, proven track records, but also get access to deals and be able to recognize a deal that is a standout deal. So because it's not, and this is one of the things that we really go into, like, yes, it may be a massive market. Have you analyzed the size of the market properly? Let's learn how to do that. Assuming now you have, how is that startup going to crack the market? Right. So one of our general partners was the first check into the very successful Venmo, which is one of the largest payment platforms ever, and it was created in the United States. And when he made that first $250,000 check, there were probably 100 payment platforms on the market. So why was that the right one? Why is that the one that exited to PayPal for multi-billions? Well, one of their main marketing hack was they were the first company to say, if you want to transfer money, all you need is a mobile phone number. Yeah. And that created a market in and of itself, right? So knowing these kinds of things, what you're looking for, how they, you're not going to be able to say, oh, I'm looking for XYZ. But when you see it, if you've done enough deals, right, you will notice it. You will understand that it's there. And that's why not practice? Why not get the experience and then go out and start your first syndicate? And then you build trust with your LPs. And then you start your first fund. And 10 years down the road, you're, hopefully a successful VC.
Bogdan, anything to add from you?
The story about the investor in Venmo is really a good one. And what I can tell you from SeedBlink experience when it comes to that is that all the companies that we've seen to be successful, to go from pre-seed when we first invested in them, I don't know, back in 2020, 2021, up until this year or last year when they managed to raise a Series A, maybe a post-Series A, this type of growth, they brought onto the table a differentiator. And that's the thing that you as an angel investor should be able to identify as being the main thing that's gonna make that company successful. And of course, as Andy said, this comes with experience. All right, it might not be the first deal, it might not be the second one. It's going to take a while for you to be able to understand what's a real differentiator when it comes to the go-to-market type of strategy of a startup, and what's a differentiator in a deck, because those are two completely different things. And last but not least, another small mention that I like to add here is the fact that you can start angel investment through syndication by following the lead of someone that already has all that experience. So you have that one lead. And of course, it might be harder to get into his group or her group or whatever it is, or it might be harder to maybe, I don't know, be able to follow all the investments that such an experienced lead is doing. But by being and following such an individual will give you the lessons that you need in order to become yourself a lead. So even though you feel today that, all right, I'm not experienced enough, maybe I don't know enough about that certain market or that certain vertical that where I'd like to invest because I like the team, I like the founders, but is it the right startup? Is it going to do well? Because that question arises whenever you are looking to invest in something. Look for someone that already knows that market, that maybe already gotten burned once about that market, and follow the lead. Because be sure that I haven't seen in my brief experience of 6 years an investor doing the same mistake over and over again. You maybe do the mistake once, but afterwards you'll be 10 times more careful than when you would look to invest in the same area. So yeah, that's what I wanted to add here.
Brilliant. Thank you, Bogdan. Now, switching from theory to practice a bit, we've talked about venture investing, how it's evolving. Let's look briefly at how we can apply this. We already touched upon the fact that you can do syndicates now. A lot of funds started out as doing syndicates, doing SPVs and these kind of things. Andreessen Horowitz being one example here in Austria or in Europe. Speed Invest is another one. That's exactly how these people started off, because you need to build yourself a track record before you raise a fund. Otherwise, it's close to impossible. You need the knowledge and you need the tools. The tools are out there. SeedBlink being one of the providers, obviously, but the knowledge is out there as well, luckily. And I guess that's a good cue, Andy, for you to briefly touch upon what you guys at Venture University do in the masterclass.
Yeah, absolutely. So maybe first of all, who is Venture University for, right? Who's actually joining? You have like two large groups of people. You have younger people between 25 and 35 that are looking to get into VC. And then you have an older, usually a little more seasoned group starting 40 and up, people who have sold their companies, people who are part of family offices, who are investing perhaps in funds, but want to understand, why does the fund make an investment? How does it work? Obviously, angel investors like myself who are looking to understand how to also harvest their investments. And so, the more you know about venture capital and the more you know about investing, the more interesting the masterclass is. So it is 5 days, it is 40 hours. It goes through, every single details of how do you do waterfall analysis. What is the difference between a angel deal and a VC deal? What are the kind of returns that you need to make? How does the power laws work? Yeah, how do I set up a good cap table? What would make a bad cap table, right? All of these things. So I would say real MBA level, based also all on case studies. So the two partners that are the general partners of Venture University have had over 20 billion euro exits from early investments, so early Facebook investors in Anthropic. So following people and understanding, what they've done, what Bogdan was saying, is really very important. And the master class is all about that. That is the whole first week of Venture University. A lot of people then, continue on and go into the Investor Accelerator. And we talked in the beginning about how that works. So it really is an opportunity. If you don't know venture and you want to understand all the terminology, you want to understand the frameworks, it's a great opportunity to get a real sense of what's going on. If you do understand that, it's a great opportunity to get real depth on how do you implement it. How do you use a waterfall properly to make sure founders are incentivized so they, even after they've lost control of the company because there's been 3 or 4 rounds, how do you incentivize them with the right kinds of shares and options so that they're going to continue to perform? All those kinds of questions are answered. And from the investor accelerator, you will come out with real deal experience. So there is a young guy, I just want to mention this one thing, who did 4 quarters. He's 28 years old. He came out of the 4 quarters with a track record of 22 deals that our fund invested in that he was part of. He just raised his first syndicated raise $500,000 and is off and running. So, I mean, it is, and it's also because he's able to show, look, I've done all these deals. I have this track record. So it's that double level of knowledge, Ronald. It's the masterclass followed by the investor accelerator.
Awesome. I guess that's that's a very valid point, because at the end of the day, learning by doing, and hopefully learning from the best people who have done it before. Because at the end of the day, venture is not something that you study at the university in a theoretical book, but something that you learn by getting your hands dirty, and hopefully by having experienced people around you. Now, this is the knowledge kind of part and the education kind of part, which is vital. And then obviously you need the tools in order to execute your first SPV and syndicate. So I guess maybe 2 or 3 sentences from your end, Bogdan, how that is done currently, and what options are there in the market.
Yeah, so thank you. As Ronald mentioned, SeedBlink is currently one of the options to actually put a syndication through and get it up and running. That everything that we've created today, it's based on years of investments in companies across Europe and a few small exceptions in the US. So the way it works is you find the right people to have together to be able to present towards such an opportunity for a syndicate, and then you look for the option on how to do the syndicate. The way SeedBlink does it, it's a bit more different compared to other solutions that are out there, because we don't create a new company in order to be able to invest in a certain company and complete your syndicate. We take care of everything from the operational, from the KYC, from the application of who wants to join, what's the process. You don't have to deal with everything through WhatsApp to hey, did you sign, did you do that, did you do that. Everything is fully digitalized. That's what SeedBlink has done. That's what we've been doing for this last couple of years. And then from the legal perspective, we provide the vehicle. We provide the entire way for you to don't stress out at all when it comes to how this is going to happen. Do I need to go and create something, find X amount of lawyers, try to see best jurisdiction? How do I onboard people? Where does the tax apply? Will I lose money? Is there a double taxation? All these are questions that you don't have to worry about if you do it via SeedBlink. It's something that we created, and we tried as much as possible to do your syndicate in a simple way, and in a way where at the end of the day you can find other investors to join you and you can learn from it. Operational and everything else, we do it for you. That's how it works.
Awesome. We're 45 minutes in, with me being late. The floor is now open for questions from the audience in the Q&A. I see a very long question statement, kind of almost sounds like a pitch of a company to me. I think that's a bit too much into detail. But is there, maybe we take it a bit of broader approach. Is there anything that you particularly diligent on when looking at the deal that you would invest privately, Andy? I mean, obviously, of course, you said there needs to be a market that allows you to grow to a certain size, assuming you take a certain share, and so on and so forth. There needs to be a founding team. But Is there anything that stands out for you? Was something you put particular focus and attention to, and or topics that are an immediate red flag for you, just from your decades-long experience? Would be interesting to know.
We don't have immediate like topics as far as things that we don't invest in. So we invest from 6 different verticals. But I do want to say that, you need to hear it a number of times. This topic of what is the magnitude of improvement compared to the status quo. So it's really important to understand that, all problems are being solved today. Right? It's not like the problem isn't being handled. There is a solution out there. It's just not the great one. With the Venmo, people have been transferring money for ages, right? So the question is this to really be looking for whether or not this is in fact a revolution, right? Is this incremental? Is this like twice as good or 5 times? Like, we're just bringing out a company that we found that is a cancer treatment company, and it, specifically has reduced a certain type of condition by being able to deliver large amounts of a drug directly where it's supposed to go, where most people, when they have a certain problem, almost everyone dies, right? So about 20% survive to 100% survival rate in mice. Now that's a revolution. And that's a complete change in the way things are being done. So those are the kinds of things that we're looking for. And I think as an angel investor, it's easy to sort of get excited about a deal. It's easy to get excited about a team, but you're not necessarily have a structured process that you go through where you really ask yourself all the right questions so that you say, okay, this is something that has the potential to have a return that's off the charts.
It's the old saying, like in public markets as well, don't fall in love with a company, right?
Yes. And I would say I did fall in love with too many of the companies, and that's a learning, right?
Yeah. Was there any pattern, Andy, when you look at your companies and your exits that you would have told 20-year younger Andy not to do or to do?
First of all, I would really have I would have stayed far away from incremental improvement things. So in other words, this is 2 times better, this is 3 times better. Far, far, far away from that. The other thing is that I look much, much more carefully now at the team and the interaction of the team and how, what's the likelihood of these people getting along and how is that going? So, and I also, coach teams now to set up well in advance proper exit strategies for the case that somebody might want to leave, somebody has a baby, somebody wins the lottery, somebody decides they want to do something else. Yeah, and there are real methods of doing this, setting it up in a proper way. I mean, I also have gone from being really impressed by a team and being really impressed by the founders to needing to be blown away. Yeah, it doesn't mean that they have massive. I don't necessarily even look for massive experience in the field anymore, right? Because most of the people that are transforming industries are coming into them with a completely fresh look at it, right? But I do look at the level of, I start to understand after you've looked at so many deals what the right level of commitment actually looks like. So there's a couple of thoughts.
A classic example would be a guy called Elon never having produced cars or rockets before, right?
Yes.
Okay, so you're looking for fundamental
so.
complete disruption. Makes sense. Bogdan, anything to add from your end? By the way, you can all use the Q&A button, and I think we even have something. Bogdan, anything you want to add, or we shall go to the questions now?
No, let's address the questions that came through in the meantime when Andy was answering.
First question is, for people who are advisors or coaches to startups, am I qualified enough to be considered for venture university? ? Yeah,
so that's a great question. So a lot of people that are doing VU are doing it because they are in a situation where their livelihood is coaching startups, and a lot of them haven't actually done financing rounds themselves. And so they're not able to tell the startup what to do and what to look for. We also have a number of startups that go through Venture University because they realize, okay, what I'm pitching right now, startups spend probably anywhere from 30% more and up of their time. At least somebody spends 30% more of their time of the founders raising money, right? And they've, for the most part, never been on the investor side. So they don't really understand. Venture University gives you that opportunity to genuinely be an investor in a company. And as an advisor, it gives you a genuine track record where you can go to the startups and say, look, I really can help you raise money because these are all the companies that I've been involved in the financing rounds of, right? And here's the real list. You can check them all. Yeah. And I also understand what you're missing in your pitch right now and why you're probably not going to raise money with the pitch you have. So I think that those are, those kinds of people are absolutely highly qualified for Venture University because we are looking for people who have real industry expertise, real understanding of markets, but haven't necessarily and don't have the venture capital understanding because they're not VCs. That's the opportunity you get from joining. And I guess, Ronald, we also want to go through the actual details, right?
Yes, the question would be, can I realistically do this alongside a full-time role? I guess that question is tied to the previous one.
Yeah, so most of the people doing Venture University, and by the way, most of the people setting up syndicates as well, are doing it part-time. Yeah, so Venture University is very nice for Europeans. You're in a cohort together with mostly people from North America. Most of the meetings run on California time. So, from 5 p.m. till 9 p.m. in the evenings is where like the key partner meetings and things like that happen in Europe. So yes, you absolutely can do it part-time. You probably want to at least be able to carve out, 5 hours a week for meetings and another 5 to 10 hours a week for actually working on deals.
Thanks, Andy. Next question is, what do participants learn that they would not learn by angel investing on their own? I guess you touched upon that briefly, but maybe you can elaborate once more.
I mean, I have to say, when I look back right now on the 55 investments that I made before I did VU, it was mostly driven by my belief in the person that I was looking at. Yeah, that was the main driver and my general understanding of the market. It was not based on really, detailed frameworks and structures and understanding the importance of due diligence and things like that. So I think that there is genuinely a difference between a angel investment where you sort of have a gut feeling and you think it's a good thing, so you say, let's give it a try, or you have an investment that you've actually gone through the details of, and you have a good reason to also tell others, if you are opening a syndicate, telling others why you think it's a good investment for them as well.
Awesome. Feel free to add some more points you consider vital in terms of Venture University, Andy.
No, I did say that I would mention the cost. So
right.
the standard, it is about the same as an average angel investment. The average size of an angel investment in Europe today is around 23,000 euros, according to the European Venture Capital Group. 1/4 of Venture University is 18,500. A full year is 40,000. There is a special offer for SeedBlink members, so which saves some thousands of euros in joining, and we do very specifically this quarter. The next round is starting on March 30th. There are 2 spaces left in the Investor Accelerator, but the masterclass is open. So and the one after that starts on June 15th.
Brilliant. So it's the usual one one masterclass per quarter schedule that you guys follow.
One masterclass, one investor accelerator per quarter. The masterclass is always the first week of the accelerator. You can also, there are people who decide after the masterclass they want to continue, and those people we make space for as well.
Brilliant. One more question we have here. For someone who wants to take this seriously and wants to accelerate their learning curve fast, how many cohorts should I do?
I did 4. The guy who is now running Switzerland for us did 4. I think 2 is really the right number. The first quarter, you are really learning what it means to be in the fund. You're finding the right people to work with. You're learning what it means to present at a partner meeting. It's a little intimidating. You start to watch, after you've watched 6, 7, 8 investment committees, you start to understand what is going to actually get through the investment committee or not. You start considering whether or not you're ready to set up your own syndicate. And then the second quarter, you're really flying, and you feel like a VC, and you understand how to use the checkbook. And what I will say also is 10% of your tuition is invested across all the deals. You have a real vote on the investment committee on that money. And you are incentivized. We have a very strong alumni program. So you're building a network of people that you can invest with for the rest of your career. You're invited every month to come see our deal flow. And very large percentage of our deals come from our alumni because we share part of the carry, part of the profit together with the alumni if they bring a deal. And we've enabled a little over 100 people to start syndicates and funds up till now as well. So 2 quarters is a good amount.
Brilliant. Thank you so much, Andy. We are a proud partner of Venture University for quite a while now as SeedBlink. I think we are doing complementary services and businesses for the ecosystem. There will be a follow-up email to everybody who registered for this webinar in the course of the next 2 days. If anybody's interested in the Venture University Masterclass, we will be able to link you up with Andy. And obviously also provide the link to the SeedBlink syndicate services. Having said that, cordial thanks. Much appreciated, Andy, as always. Cordial thanks, Bogdan. And wishing everybody a restful evening. And we are right on time at 6 p.m. CET. Thank you so much. Take care, everybody. Ciao, ciao.
Goodbye, guys.
Bye-bye. Thanks, everybody.